Good morning, everybody. Welcome to the Flow Show. Here we are, Tuesday, the 10th of June, and more trade deals or talks happening with China and the US. Apparently, they're kicking off around now. Were to be kicking off half hour ago, but it doesn't matter anyway. All that matters is when we get some comments out of it. Right, let's get stuck into all the headlines and whatnot. Let's get rid of my ugly mug first. Right, first of all, Mr. Ueda, even. Oh, it's been one of them days already. Mr. Ueda decided to send the yen on a merry walk. Said there's limited room for rate cuts with the short-term rate at 0.5%. The rate cut room is limited if they wanted to boost the economy when needed. This is underlying inflation still below 2%. Real rates kept negative to sustain target. He pretty much, as I said, give the yen a bit of a kick in overnight. Managed to blow me out my short anyway, kicking it right up through 145 on that comment about rate cuts. It looks, given the speed at which it reversed, it looks like the old algo's got into it. All he was saying basically is that they've only got rates at 0.5%. So if things did get turned sour, they haven't got much room to start cutting, which means other policies would have to come into play. The market didn't like that at all. Just shows you the volatility we've still got going on in this pair, where you can still get a 60, 70 pip move out of nowhere. But it doesn't mean they're going to be looking to cut rates at all. PM Ishiba, he's got an election coming up in the summer. He is apparently going to pledge 50% pay rises for everyone by 2040. Also, he's going to turn the economy into a quadrillion, I think he called it, quadrillion economy. It's going to be worth quadrillions of yen by the time of 2040. As I mentioned, these are all election pledges, so take those with a pinch of salt, if you like. He also said he's going to hold bilateral talks on the sidelines of the G7 meeting in Canada with Trump. That's all starting towards this weekend. I think it's I'll have to check. I think it's over the weekend, this G7 shindig in Canada, to which everyone else has been invited. Even if you're not in G7, loads of people have been invited to that by Canada. Anyway, Ishiba and Trump apparently going to hold some sideline talks there. Trade negotiator Akazawa is still making plans for his next trade talks with the US. That's still ongoing. This is also falls into the election nearing by the PM. The government is apparently thinking about cash handouts as an inflation relief measure. So their sole goal is to get inflation and wages up. But if they get inflation up, they want to give people money to offset inflation going up. Go figure that one out. But anyway, that's what they're looking to do. Finance Minister Kato talking about markets, talking about fiscal policy, really. So they will conduct appropriate fiscal policy. But then said that he emphasises the need for a variety of investors to hold JGBs. This can be seen as a little bit of a nod to maybe some of the big Japanese whales that they need to start getting involved in the JGB market. And I don't need to give you three guesses to know which end of the bond market he would like them to get involved in. So we've got this growing stuff about whether the BOJ are going to tinker with bonds, whether the government's going to tinker with bonds, and now they're giving out subtle hints that investors should get into JGBs. So it's all bubbling along, all simmering along. This snowball is rolling, and something's going to happen, I think, at some point. Over in the UK, we had a little bit of soggy news for retail sales. I'm going to start there. We have this BRC retail sales monitor thing, which was a positive 0.6%. but it was far less than the prior 6.8% and expected 2.7%. We have seen reasonable retail sales data for pretty much the first quarter of the year, and that might be softening based on that number, 0.6%. Doesn't mean it's fallen off a cliff, but it could mean that we're going to see some softer numbers, particularly now what's happened in the jobs market, which has seen a hefty, and very hefty, it's not going to show the numbers there, obviously, 109,000 loss to payrolled employees. 109,000. That's the biggest since 2020. Okay, that's what's getting all the headlines today. It was expected to drop 20,000, which looks way off as far as expectations go. This is because we had all this national insurance rise coming in by the Chancellor, basically a tax rise, and it's hit firms pretty hard. It's been a steady grind lower in these payroll numbers since the government took over, and it's just tipped over the edge with this numbers. Now, this was to be expected. It could continue for maybe a month more. Then we need to see whether it stabilises or not. If it's just a reaction to the national insurance rise, it should be a short-term hiccup, if we can call it that, and then things might recover. But if these numbers keep dropping and dropping and dropping and dropping, then that's going to be a real issue for the government. It's going to be a real issue for the Bank of England. In the other numbers, we had wages coming down a bit. Earnings ex bonus coming in at 5.2% from 5.5 prior, including bonuses 5.3 versus 5.6% prior. Still running fairly hot numbers, which is one bit of good news for the government and the economy, that with inflation coming down, real wages are still positive, and that will be a boost for consumer spending if people aren't getting hit elsewhere. So that's pretty good news. The unemployment rate went up a pip to 4.6%. And as you can see, the claimant count also jumped to 33.1 there too. So not a great set of numbers there, and that's pretty much poleaxed the pound this morning. If you're looking at anything related to the quid, you're seeing it's had a good old spanking today, but I'll look at the prices in more detail. After that data, rate futures are priced in 46 pips of cuts over the rest of 2025 versus 39 pips before. So we're getting close to that 2-cut margin, 50 pips, 25 pips a meeting. No doubt this sort of data is going to have people like Dingra, the arch dove, probably calling for 75 pip cuts, upping it from a usual 50s or whatever. So Bank of England next week, you can be sure this data is going to be featuring in that lot. Over at the Bank of Spain, and ECB Bod Escriva has cut 2025 GDP forecast to 2.4% from 2.7%. Hawke Holtzman, who abstained in last week's vote, said the inflation goal is already in reach. We may take a longer pause on rates, and says a rate pause until the autumn makes sense, which is code for he's already booked his holiday, so he's not going to be doing anything until the autumn. Victor Villeroy says policy and inflation are now in a favourable zone. Says being in a favourable zone doesn't mean the ECB is static, and that the ECB will remain as agile as necessary. Now, he's been one who's not given up on further cuts, but these comments are a little bit of a turnaround from that dovishness, saying that rates are now in a favourable, or policies in a favourable zone. We did have a bit of data out yesterday from Mexico. I don't think I've got it on my chart because I need to add it in. No, I haven't, so tough. I'll have to give it to you manually. Core inflation rose to 4.06% year on year from 3.93. Headline inflation was also up 4.42 from was expected in at 4.38%. So a little bit of heat there for Mexican inflation. Not that it's probably going to change the minds of Mexico initially. Bit of US data, not much, but we had a bit of US data out yesterday. Wholesale inventories coming in at 0.2%. Was expected to come in flat. Sales, that was up 0.1%. So not much to take from that data anyway, but not a lot out yesterday. Bit of a quiet session, particularly through the US day. We did get some inflation expectation numbers from the New York Fed. Their survey, they dropped to 3.2% from 3.63%. However, recent pessimism about the labour market eased somewhat. Still pessimistic, but not as glass half empty as they were before. Trade talks are front and centre. Treasury Secretary Bessent, speaking after the session yesterday, said talks on US and China, they had a good meeting. Lutnick said talks were fruitful. Trump said we are doing well with China, but it's not easy. We want to open up China and we're going to see about export controls with China. China state media came out saying they seek a win-win outcome in trade talks with the US. However, again, markets got a little bit of a kick in the nuts because there was a social media post from someone linked to state media in China that said things weren't going as great and that China was strongly keeping to its red lines of needing the US to remove all negative measures. So a lot of people in our chat room coming in and wondering why stocks took a little bit of a knock in the wee hours this morning. I'll look at the S&P, as you can see right in there, that big fat candle. We saw pretty much all stock futures, particularly China as well, heading lower on that. We have had a little bit of a bounce, but the market is a bit wary. Now, there's a little bit of a wake-up call regarding these talks, and it also shows us how much people are looking at these talks to see if we're going to get anything positive. As mentioned, these talks should have been resuming about now. And the fact that we're getting very little detail from these talks, apart from the usual things are going well from the US side, might suggest that something fairly substantial is brewing from these talks. So that's what we're going to be trading pretty much all day today whenever we get the headlines. Is this going to be something substantial? And then we have to go through the details. If we get a meeting or if we get an outcome that says talks were great, but we're going to keep talking and we're going to have meetings further down the line and there's no real headlines of progress, I think risk is going to take a little bit of a kick in for a while to react to that. If we do get something along the lines of some sort of trade deal, reduction in tariffs, mutual reduction in tariffs, looking forward to how they're going to progress, then we should see a boost to risk. We'll see probably the dollar rising, stocks smashing on higher as they have already, or have been already, shall we say. So there's lots going to come from this. It could come out of nowhere. Okay, there's no, as far as I'm aware, there's no set statement time, press conference, or anything like that. So just be careful if trading today. Okay, there's big headline risk. If we get some headlines dropping any time, markets could go a bit mental. So just be careful if you're trading. If you're in positions, make sure you got them covered. If you're not in positions, looking at levels might be worth sitting on your hands because I don't know which way this might go, and it could go quite big and volatile. So just be careful with that. As I say, a bit of a quiet session, so all done and dusted with the headlines already, 15 minutes in. So that's pretty good. So we might as well get stuck into some of the price moves. So as I said, there's the S&P at the moment. We still can't really get a move. Oh, let's go into one that's got a few lines on it, shall we? We still can't get really above this 6,000 level. Oh, there we go. Okay, this has all been a bit huffy and puffy all the way from 59s and below. So as for having a look at these prior highs up in the 6140s, it's all going very, very slow at the moment. There still seems like there's a lot of reluctance here to take this higher. As I said, this news today, if it's positive, that's probably going to be the clincher, and then we're probably going to be going up at least to the 61 level on the back of that. But for the moment, it's looking like it's running into a bit of trouble up here. Can't deny this trend that we've had since April. It's still very strong, and a lot of eyeballs are on here. There's going to be a lot of people, particularly short-termers, who are going to be just buying the dips, hoping for a move up here. If we get a move up here and we fail 61.40 on a first test, we're probably going to see a decent pullback. I wouldn't be surprised if we go all the way back down to 6K, and then we need to see what happens there. If we get that sort of move up to here, back down to there, and it holds, another return up here will probably be the one that blows the level out the water. So just keep an eye on that price action, what happens here. Obviously, bad news, we're going to see where we dip to. This 59, 59, 09, 10 level is something to keep an eye on. If we bounce from there, that'll be the market saying, okay, we've traded the disappointment. That's as far as we're going to go. And then we're probably going to go back higher again. Dollar yen, as mentioned, this move above 145, bit of a wake-up call, as I say, that you can, still get these volatile moves. The level held like a dream last week, and then we get a few headlines, and well, it just carves through, blasts out the stops, clears a load of people out, and then we're all the way back down again. I'll be less inclined to trade this 145 on another move up, because we are bouncing from June, from these lows. We keep now making higher highs. That's like the third on the trot now. So for me, the bias at the moment in the market is to see this moving higher. Maybe we get a move up to 146 and these levels up here. I mean, that might be a different kettle of fish, but we're still swinging around quite strongly in this one. As I've said before, we were talking about stops last week. There's nothing you could do. I'm thankful that I moved my stop down to 145.20 after slicing my shorts all the way down to 144. It just means if I'm going to get stopped, I don't get stopped and lose or give as much back on the trade. I would have still been in the trade if I kept my stop at 40. But as I said, I've made some profit. I didn't want to give too much of that back, hence bringing my stop down, which I thought would be okay above 145.10, but obviously not. Right, let's get stuck into the quid and see what's happening there. So been really knocked off its perch above 135 in cable, as you might expect. 134.50 is a level that I was keeping an eye on. If we were to get a dip down there, we've pulled up 6 pips shy of that. We can't get through back into 135 right now. So the big figures and half figures are playing all the action as normal. Whether this does go all the way back up remains to be seen. We've probably got that jobs data with the Bank of England coming. It's probably light switched us into a bit of a rally seller for the pound for maybe a few sessions until the next big headline hits. So I would not be surprised if we see rallies sold in here in the pound. Obviously, what the US side of things do with the dollar when they get in is another kettle of fish. But if they see positivity still from China, then we probably see more dollar buying, and this one will be heading back down. So be careful of that 50 level if we get a quick return there. Euro sterling, that's another one looking to try and break. We had this 84.50 level that been this sort of minor resistance area after this 84.60 break. We're back above, or we are above there now, and we're already finding it a bit of support. We're now knocking out the 84.60s area. I think we might be just about to see some stops being run. The bigger level is obviously this 84.80, 85.20 zone. It's a big old historical level, one of my biggies. Okay, goes all the way back. We have loads of action in here. So this is really going to be a big decisive level if we go through there. I'm continuing to add to my short position in small bits. I've added another little bit this morning, and I will potentially look to add into this 84.80, 85.20 zone. If we're breaking well above that, though, I might have to assess the trade. But yeah, I'm happy to keep some shorts on and build up a bit of position in this one for now. As mentioned, the Bank of England next week, probably not going to cut, but I wouldn't be surprised if the market starts getting a bit more expectant about them cutting sooner rather than later. Ali, I just spoke about that, what's going on, about the China stuff there. Right, let's move on. Let's look at dollar CAD, which is still creeping higher. We've got above this 137 area. Just going to see if it's going to hold it just now. We're just testing it again. I told you where the level was, the next area where we're likely to see some reaction, and look at where we've seen the reaction. Right, bang on it at 38.2, and this area between there and call it 137, 35, 40-ish. So we're still bouncing pretty much solidly off this 136.50, but it's making hard work of it. And the bounce for the loonie anyway is very small. You know, that's the sort of bounce you'd like to see, something like that. This is a bit more grindy, so it's still at risk of an errant headline. We could be back there in a flash. But if you're long, this is, you want to see some positive price action. But get through here, that'll probably cement the level down here, or the levels down here as support. And then maybe we can start thinking about 138s, maybe going back to 139s. But again, this has been a pretty strong trend throughout most of this year thus far. So that's not yet ready to change. The 38.2 way up to near 141 before I even start thinking about these trends changing. Aussie dollar, still hard work, still very much hard work. Again, next level up here, this 61.8, we still can't get through this 35, 36 level. It's proven a bit of a tough nut. We keep having failures up there, but the dips are getting shallower and shallower. Let's just zoom it in a bit, make it a bit clearer. So we've had a little poke under 64. I said 64.80 is the level to watch. I haven't quite got down there. Again, if we get a secondary move down there after this bounce, that might mean we're heading a bit lower. Longs are still, or buyers are still pretty much in the game with this. It's still looking supported. But once again, if you get a big headline, it's not going to count for anything. So, you know, if you're in trades, if you're in longs, you need to be taking profits pretty quickly in this, even if they're partials, locking in your stops, just so you don't give any back. Then if you do get a big dip, you can always get back into the position thereafter. What else you want to look at? Let's have a quick look at the old Kiwi. Probably doing similar. We're up into a fairly decent zone up here as well. Again, another one that's seen a lot of action going back and back and back and back. So we had the break under. It became support resistance pretty much straight after. This is a decent return, so not a surprise to see a reaction here on a first test of that level. Again, we haven't been here for a few months, but again, we're keeping this uptrend going, keeping this whole move going. If you take out all this sort of noise and trade crap in the middle, this would be a decent uptrend. So again, dip buyers still in evidence here, particularly down to this, back to 60-30s area, which is now a bit of a break point. It got a bit washed out, but if we do start to hold here, then we're going to give this zone a good old testing, shall we say, and then maybe we're heading much higher. All right, guys, don't forget to give me your pairs and assets to look at. Anything you want me to get over, otherwise it's just the sound of my voice talking about my stuff and what I'm looking at. Gold, Still can't get through this 30-30 area. We've had a little nose poke, but it hasn't held. We're still mooching around it at the moment. So until we see a move above that's actually confirming or going on to get back into the 134s, then again, another pair that's still not out of the woods. I'm using that saying a lot, still not out of the woods. But that's just the way the markets are trading at the moment. So this is your 30-30 is your pivot level. So take your guide from there. Dips, still very shallow. We had yesterday's dip that stepped up a little bit today. So that's constructive, at least intraday perspective, and seeing a bit of a push higher. So that might be the one. The next move above there might be the one that takes us on. Maybe we're going to have a look at this 33, 60, 70 area up there. Euro dollar, Mr. Bran. And still nothing I'm really interested in at the moment. Still knocking ahead up here on this 114.30 area. Dips. We're having moves under this 114 level. So it's there's the washing out a bit as the figure. So set your sights a bit lower down towards the 75 area for your intraday support at least. Is a bit of an on-off area if you stick a line in there, which I can't be bothered to because it's a bit short term. I'm still not really interested unless we're hitting some of these extreme levels here. 115 is still in the frame though. And again, maybe something that happens with this trade news. See if they get a deal with China. The market might be expecting that others will follow not long after. And then we'll get the reaction here and see what happens in that one. Dollar China doesn't seem to be taking too much notice of any of it. I still think Chinese officials are keeping this one on a very, very tight leash at the moment. Because even with Chinese stocks and that little blip overnight, there was no real move in this one when we got all those moves in stocks. So this is well in control at the moment. Again, though, maybe if we get a big headline, they'll let it go one way or another just to let the price of the one reflect whatever that news is. If it's good news, then maybe we're breaking down, going to be hitting some of these lower levels down towards, 710, 711, 712. That zone maybe even creeping under there. Depends what they want to do with that and whether the news is as good as everyone might be expecting. You want to get into your yen crosses, euro yen. We'll start there. Again, also looking constructive, looking like it wants to push higher again. Big level, still 166. A lot of traffic up there, going back. Dips, 163s, 164s is where you want to be looking at for any dip moves. If we're going back under there, we're getting back into this noise. But again, it's messy, but we've got a little bit of an uptrend going on here. You get all these little moves, these volatile spikes underneath it, but generally the uptrend is still in play. You can see that because we've got a very, very close knit lot of moving averages going in here, which by and large could be acting as support as well. So if we do take out this 166, then we might be putting in a test of the 61.8 of this old move from late last summer, and that'll be another level in itself. Guys, let me know what you're doing as well. Don't just chuck up pairs. You're long, you're short. You're looking to get long, short. What are you looking to do? It's right, me waffling, but I want to hear what you guys are doing as well. Where's Guppy? If I can find it, it must be down here somewhere. There we go. And look at where the high came in yesterday or overnight. We was talking about this big level we got here, 195.80s. Another move above. We hit these highs. That was the end of it. Obviously, UK data has put the kibosh on that move, but it just tells you that we are perhaps willing to go on a little bit of a run higher. But for the pound, as I say, if we've had a little bit of a light switch moment, and now the market's thinking, oh, bad jobs data, Bank of England next week, rates, expectations ramping up a bit. This might not be a bit of a dip buyer to get into just yet. We could see further losses, maybe down to 194s. Maybe this 191s, 192s is a bit too far for that sort of move. So yeah, maybe look around the 192, 193 area for that one. Surab wants to look at silver. Yeah, there we go, down there. Still going. What you're doing, Surab? Let me guess, you're trying to pick a top, or you're long, and or you want to get long and want to know where it wants to dip to. So whatever way you want to do it, you've got to start doing your, get rid of that. You've got to start doing your price levels and seeing where the levels might come in. This I picked up yesterday, 136, a little bit messy. Haven't really had a test of that. We've had a little bit of a step up perhaps to this one, to this 36, 35s. This is all short-term stuff, and you know I do this when we're in places where there's not a lot of tech history. You've got to build the picture up yourself. So around this 36, 30s area, we might have a bit of support to watch, but it's very short-term. You certainly don't want to be buying off that with $3 stop loss or something. You want to keep it short and sweet for this one. We've got another high in. So we'll just chuck the level up there, just coming into that 36, 80s, 90s area. That's your marker for now. If we go and nick it, a new high, even by, a couple of cents, that tells you we're not done going up. But if we come to here, hold it, maybe even hold just around there, 36, 79, 80 area on a test, then maybe we're building a bit of a top. In that, your lifetime long, Sarab. Okay, so you've got no problems whatsoever with this one. We are creeping up towards the 37 figure. We are creeping up towards, if I can get it in there, might need to go on a weekly, I think. We are creeping up towards this weekly, monthly high back in February 2012. Might not be something you're going to put your house on, but you see this sort of price action happening against some of these weekly levels. We saw it here. We saw it here. This level here, you might see something into there. So that's really the level you want to keep an eye on up above. But for now, there's no reason for anyone to be piling into shorts in this until you get a bit of action. Even here, this is what I'm talking about. We had a bit of a high, then we just knocked it out by a few cents. Okay, it just means the market's still ready to push, and then it didn't dip far, and then it went and broke. So the same thing happens here. We pull up short of it here into the level. Then if you want to try a tight one, at least you've got something to lean against. But even a couple of cents higher, we're not yet done with moving up. Mr. Fox, you're short dollar MEX at 03. Call it 04. That's very, very close to this 19 figure that we've been banging on about. Oh, let me get in the right chart for starters. So a lot of us, me, Kay, have been keeping an eye on this 19 level. Okay, we are finding support ahead of it. So what's your reason for being short 4 pips off of a big level like that, mate? Let me know in the chat room, because just my own personal view, that's not somewhere I'd look to initiate shorts, because if we do find this level holding, we've got every chance of maybe going up back into 718s at least, maybe to this 724, 1924, 25 area up here. My last cut on my shorts was at 1917, if I recall correctly. If I get a failure down here, I might lop off a little bit more at the figure, again, just to protect against that. If I wanted to add back in, I'd maybe want something up here in the 40s, but if I saw that 20s, 24, 25 holding again on a bounce, that might be somewhere where I tack a little bit on to my position. Right, what else you got going on, guys? Let's have a look at what's going on elsewhere. We're going to keep an eye on yields. Pushing away a bit more from this 4.5 area. We had another move above it overnight, but again, we're not holding above this 4.5 level. So the pendulum is swinging a bit. And again, it seems like dollar yen is also following yields a little bit more closely than it has been of late. Okay, so maybe yields, that correlation is coming back into focus again between US yields and dollar yen. Just one to keep an eye on, but I'm not expecting this to fall out. Now, a bit of a different reaction. We're seeing different moves in US yields over data than we're seeing in something like the UK that we saw this morning with gilts. Pretty much because with US data, we're trading the overall picture. We're trading the politics. We're trading Trump, the trade deals, everything else, less so the Fed. But for other countries like the UK, it's more about what the central bank may do. So bad data raises expectations for rate cuts, which brings a different reaction in bonds. I'm going to have a look at the FTSE while we're here. I wanted to have a look at that earlier today, but haven't got round to it yet. Because that, if I can find it, is off and running. Potentially heading for these all-time highs up here. Again, another strong recovery for all the trade crap that went on, but it's ticking on higher now. So it's a positive move. If we go on and crack these highs, then again, we're sailing into uncharted territory. So just keep an eye on that. It's around about 89, the figure. Again, this is not for shorting just yet. That's not a trend that you want to try shorting unless you get some decent levels in play that are going to hold it on the top. If you're looking at something like the all-share index, which is less internationally related and less related to what happens in the quid, we are moving up to all-time highs. So domestically, we're still looking good. Again, this is a bit in the mix because, you know, this is a bit of a, bad news, central bank easing, providing support for the stock market. But there are other things in the mix as well. You know, we had NVIDIA saying they're going to invest in the UK and do a lot of business here. So we are seeing some positive vibes coming in. And what you want to hear, what markets want to hear, is that investments coming in as well. So UK stocks probably standing on their own 2 feet a little bit, as opposed to too much reacting to the negative data means Bank of England easing coming in, which is all good for anyone who's got shares in the UK over here at the moment. So that's having a little breakout. Laura, what did you after? You did go long platinum, but got out maybe earlier. Let's see, I don't even have platinum in my thing. Where am I going to look for that? Let's just grab that one. That'll do. I don't know where you got in from, Laura. Obviously, there's nothing wrong with taking profits. And now you probably want to think about where to get back in. Has it got room to go further? Yes. Again, all these precious metals and everything, it's all going to be tied in. Silver as well. That's all going to be tied in, I think, with these China trade headlines. Because obviously the barrel or the stick that China's wielding to everyone, particularly the US, is these rare earths. So if there's any big headlines there, like, you know, they're going to reduce their export controls, then we're going to need to see if we get a reaction in these sort of precious metals, whether we're going to get a decent pullback, which will at least confirm how much of these rallies we're seeing is down to China and that stick they're waving. If they don't drop, if we say China says, yeah, rare earths for everyone, we're not bothered, and we don't see the market dropping, then something else is cooking. Okay, so we're just going to have to look at crossing off the headlines and what's actually moving markets. But again, I would suspect that if we get some decent deals with China, or particularly on rare earths, we're going to see some of these precious metals pulling back. and that could be a bit violent as well, because anyone who's been chasing this higher and long around here over the last few days is probably going to get out of Dodge pretty quickly, and then we're probably going all the way back down to this sort of area. But as I say, depends on what headlines we get. We'll take it from there. What we got coming up today? It's Tuesday, not a lot. I'm just going to have a quick look. Busy. It was a busy morning. I haven't even caught up with myself today. Oh, look at that. We've got NAFL out today in the US. So we're going to have another quiet day. We're going to be watching and waiting for these bloody headlines. So just be careful that markets don't just start sitting on their hands, don't get stuck into anything. It's going to be difficult to get out of if volatility is dropping a bit while we wait for the news. Right, going to call that a day. Thank you very much. I have managed to drag in a guest for Thursday. Mr. Brown's going to come and join us. Kay might be back on Thursday. I'm not sure if he gets back in on Thursday or if he's back at his desk on Thursday, but he'll let me know soon enough. Other than that, have a great day, everybody. Take care, trade safe, and we'll see you all later.